Hello and a very warm welcome, viewers. You're watching Discussion Today with your host, Kriti Mishra. India's gross domestic product in the third quarter of the current fiscal rose marginally at 0.4%, reaffirming that the economy has managed to exit the coronavirus pandemic-led slump by 2020 end. The agriculture sector, which stood out as the only growing sector of the economy in the previous 2 quarters, continued its run to register a 3.9% rise in the latest quarter. Cross-fixed capital formation, an indicator for investment demand in the economy, came back to the growth charts with a 2.6% rise. And to track India's economic growth prospects, I'm joined by Mr. Saurabh Chandra, former Secretary, DIPP, Ministry of Commerce and Industry, and Mr. Subhomoy Bhattacharjee, Consulting Editor, The Business Standard. Welcome to Sabha Television, both of you. Mr. Chandra, coming to you first. Economy returns to growth after contraction in nearly 2 quarters. What is your reading of the Q3 GDP numbers or data?
See, it's very heartening to note that the 3 sectors which have shown positive growth are manufacturing, construction, and agriculture. These 3 sectors are responsible for providing jobs to the bulk of our population. If this trend continues, because the disturbing thing in the same estimates was that the economy may show a negative growth in the 4th quarter. Plus the services sector, which is recovering. I hope this continues unless there is a second COVID wave which is coming. Some of these numbers have been rising, and that should actually warn us to be very careful that COVID is not over and that the services sectors turning positive would very much depend on how the COVID graph turns out to be.
Yes, sir. All right, Mr. Bhattacharjee, do you think that the initial policy of lives over livelihoods, and then, of course, lives as well as livelihoods, that is finally bearing the fruits?
Well, yes, and the first thing is that the numbers are showing that we have come out of recession. That itself is some reason for comfort. What the numbers are not showing is that we are really out of the woods, because the contraction in the economy, which was shown by the first advanced estimates, was about 7.7%. Now it is showing rather a more deeper 8% contraction. So definitely, what is the level of, why is this contraction happening? It is because the data from the informal sector, which has now come, which was not there in the first advanced estimates, and that data is showing us, because that is the informal sector which was not available in the first estimates, that there are large segments of this informal economy which have still not recovered. So that is why the lives and livelihoods, there is still a so the good news is it has started moving up, it has started recovering, but in terms of the pain that has happened in the informal sector, that pain is still to be covered, eliminated, and that is where a lot of work will be necessary going ahead in the days, weeks, and months to come.
All right, the Finance Ministry, Mr. Bhattacharjee, is also talking about V-shaped recovery. Do you agree? And could you please explain to our viewers what is a V-shaped recovery?
Yeah, that's a point. I mean, like when we say a V-shaped recovery, typically the alphabet itself shows what does it mean. That there has been a huge dip. There has been a huge dip, and there's the rise from the dip is equally sharp. And that is what we mean when we say a V-shaped recovery. Well, basically, the expectation, obviously, and that's a fair thing for any government to expect, is that while the dip in the economy was clear. Indian economy in the first quarter went down by something like 23% contraction. The government has reasons to feel that by the second quarter, when the contraction was when the contraction had eased up much, and by third quarter, for which we are seeing the data yesterday, where the economy has come into positive growth rate of 0.4%, that means that the economy has actually come out of the trough. That is the understanding when you say that there's a V-shaped recovery. But as we were discussing, that is a summation of what is happening across every sector. So, there are lots of sectors where the recovery has been very sharp. Obviously, that is why the GDP has increased and has come over to positive sector by the third quarter. But there also, as the revised contraction figures show, that there are a lot of sectors where there is a huge amount of problems still. And those sectors will take time to come out. So in the case of those sectors, then therefore there will not be a V-shaped recovery, it will be more like a U-shaped recovery. But there are certainly indications that there is recovery happening. The pace obviously will be asymmetric across sectors. Overall, the economy, again, as we started out, as Mr. Saurabh Chandra also said, that overall the economy seems to have recovered much better than it was expected in the first quarter around April to May. Compared to that, the recovery has been far more impressive. Over to you.
All right, Mr. Chandra, as Sir is talking about the calibrated approach that we took and of course the green shoots that are visible, going ahead, what are the factors do you think that will drive this V-shaped recovery for Indian economy?
The construction sector, to my mind, is very important because if money flows into the hands of the construction workers, your consumption would increase. Fortunately, the private investment has picked up. But the consumption, both private and government, they are the two things that would actually drive the future. And there are certain things we have to be a little careful about. One, what will be the inflationary impact of the fiscal deficit? As the RBI governor pointed out, this inflation targets have to be set within limits, and therefore a certain level of inflation we can tolerate. This will actually affect your real growth rate, which is what impacts you. Plus, how will the crude oil prices? If the crude oil prices go up, so will the prices of petroleum products to which the domestic prices are linked. And some of these price increases will have an impact on inflation. On the contrary, if the prices shoot through the sky, as some are predicting, and you have to cut down on the taxes, then your fiscal deficit may be impacted. Have to find alternative sources of revenue. Now, these are the things we need to look at.
Sir, if I may interrupt, what are the measures? You said that we have to find alternatives. What could be those alternatives?
In the short run, it's going to be difficult. But some of the non-tax revenue items, for example, disinvestment receipts, we have only achieved a fraction of what was provided in this year's budget. If the PPCL disinvestment comes through, if the other public sector units disinvestment, which is actually privatization, comes through, if the LIC IPO goes through, it can help in easing the revenue shortfalls. But even next year, the fiscal deficit is targeted at about 12 lakh crore. Now, there is a little concern about that because sooner or later, it will have an inflationary impact.
All right, let me take that to Mr. Bhattacharjee. Sir, of course, we have the disinvestment target that the government has talked about, but certainly the fiscal deficit worries would continue to worry all of us.
Well, what Uh, Fiscal deficit is a cause for worry, certainly. I mean, we have seen that this current fiscal, we are talking about 9.5%, and in the next fiscal, we are talking of 6.8. That means we are talking of a correction of around 2.7%, which is a very big thing. How big? It has never been. That sort of a recovery and change in fiscal deficit figure has never happened in Indian economy. So if you're able to pull it off, it will be substantial. Uh, while that is there, I would be looking more into the quality of the fiscal recovery. For instance, again, looking at the GDP data, which is what we were looking at, you would notice that the government expenditure in the third quarter has not risen much. In fact, it's actually been, surprisingly, it's actually been lower than expected. But the interesting thing is the investment figure. And that is where a lot of interest would be there. The investment figure, there is a sharp recovery.
Yes.
In fact, the investment rate in the economy is likely to improve to 26.7% of the GDP in this fiscal, that is in 2021, which is a major improvement from 24.4%, which was seen in the first advance estimate. Now, this is actually remarkable that in a year when we are seeing a compression of expenditure by the government, and because of lots of measures, because the money wasn't available. Yet, if in the middle of that, the government is able to ensure that investment rate has risen, I mean, not just government, I mean, I would say in the entire economy, that the investment rate is rising, then that is something which is very, very remarkable in terms of the quality of correction that's happening in the economy. Because then it shows that the economy is being helped by the right type of medicines. It is not simply being pumped up with just supply of cash into different sectors, because that can give a certain amount of glow, just putting in cash, but it doesn't stay. It's like a steroid. What you need is substantial correction, and that substantial correction, going by the investment data, which is coming along which has come up in the second advance estimate, is quite a remarkable change, and that is something that is one should be feeling good about. There are lots to be worried about at this point, because, for instance, we are talking about the Q4 data, because the third quarter data is actually making the Q4, which is not yet come, and for the data for which will come in May, in a bit of a peculiar situation, because then now we are sort of, if you calculate, it seems that in the Q4, there could be a fall in the GDP.
Yes.
On the basis of the revisions. So obviously that is not on, because you would see that most of the sectors of the economy are actually coming back to life. So to expect that this will actually lead to contraction rather than expansion doesn't seem intuitively correct. What will possibly happen is that because of the large disruptions even in the data that has come up and others, I would expect that even the final estimates that will be coming out in May, we would again see a substantial change in the GDP numbers.
All right,
that is
there are
when
concerns.
we'll get a proper.
Yes, there are concerns about the Q4 data, but you also mentioned about investment. Mr. Chandra, we saw gross capital formation, that also in the positive territory. How does it reflect on India's investment sentiment?
You see, as the Prime Minister has been repeatedly saying, and that private investment has to flow in. Now, what the Prime Minister says does instill a lot of confidence in the private investors. There is talk of revising the PPP model. The previous one had its own problems. We have to leverage government expenditure to get as much private investment into the economy as possible. The government alone cannot do the job. Therefore, we have to create the conditions in which private investment flows in. Private investment is both domestic investment, it is also foreign direct investment. A lot of FII money is flowing in. but that FII money is hot money. We need to get FDI into the country, which has been growing very encouragingly in the last few years. We need to scale it up. The domestic investors have to invest in this country. Why should a domestic investor invest abroad?
Yes.
If he can make money at the end of the day, he would be very happy to invest in this country. Therefore, we have to get projects going. We have to ensure that these projects are risk-free from regulatory clearances point of view. That is what will make PPP click. We have to give them projects which have all regulatory clearances. But the bottom line is, as the Prime Minister has been repeatedly saying, is that we need to get the private investment into the economy.
All right, Mr. Bhattacharjee, my question stems from what Mr. Chandra said about regulatory clearances and, of course, private investment in the economy. I'd like to talk about manufacturing here. Of course, in the data also, there were inspiring figures. The government has launched several schemes. The government has been talking about Atmanirbhar Bharat. There's PLI scheme for the manufacturing sector. The focus, of course, it is to enhance the contribution of manufacturing to 25% of GDP. What could be that game changer for India's manufacturing sector?
Right now, what we should be doing is basically doing more of the same. That is the whole idea. That means that essentially, if we are doing, as you talked about PLI, the production linked incentive schemes, well, all of these schemes are basically the right ones, and they should be continued for a considerable amount of time. Otherwise, changing of schemes can actually create more confusion. And even if some other scheme looks better, it's not necessary that they will deliver. It's necessary for us that we having worked out certain of the schemes, they should hold the course. Manufacturing sector, yes, I mean, if you look at the data, it's grown about 2.3% in value add. In fact, the interesting thing is that the services sector, which had actually gone down very sharply, just as manufacturing also did, has actually now recorded a similar growth rate as the manufacturing sector. So there is what I would say, so while in the manufacturing, more than manufacturing is a construction sector, which is actually looking good, because there the figure has gone up to something like 8.4%. Yes. The services recovery is something that is worth being pleased about, because that is a large part of the Indian economy, and that is where most of the stress had come because of the COVID impact. The contact business, which is essentially a large part of services, had taken a big beating. The fact that services growth has come back and is now matching the growth rate of the manufacturing sector is an interesting development and a heartening development for the Indian economy, and to make all the numbers sort of try to look better in the next iteration. Yes.
All right. Of course, there are hopes for better numbers in the coming quarters, and of course, we hope that the pandemic declines, the curve declines, and also there's large-scale vaccination rollout. And we hope that Indian economy will convert this challenge into opportunity. On that note, thank you so much for joining us. So that's all we had for you in discussion today. Thanks for watching and stay tuned to Rajya Sabha TV.